Hey, what's up, my friends? So this week I got a loss on New Zealand dollar. I got stopped out of my trade. So I want to share with you on where I exited the trade and why I think there's actually a potential opportunity to go back short on the New Zealand dollar. So after which we talk about the Euro Aussie as well, on how I actually see shorting opportunities on that pair. And last but not least, we talk about chart pattern, in particular the head and shoulders pattern, on why you actually want to be careful when you are trading such patterns in the market. So all this and more in this week's market analysis. I'll see you there. Alrighty. So last week I believe we talked about the New Zealand dollar, and just a brief recap. Looking at the New Zealand dollar, this is the weekly chart. You can see that price is clearly still in a downtrend. And you can see it's respecting the 20 period moving average over here and over here. So the red line here, just to share with you, is the 20 period moving average. The blue line is the 50 period moving average. So the weekly chart, price is clearly in a downtrend. And this is the 4-hour chart. And if you recall, last week on the 4-hour chart, I said that I was looking to short the New Zealand dollar. I said there was a potential head and shoulders pattern over here. This was the neckline. And I went short when price broke the neckline. So price went in my favor, and then it traded against me, and I got stopped out over here. So I got stopped out of the New Zealand dollar. There is no shame in telling you that I got stopped out, because honestly, in trading, if you don't have any losses, then I think that's gonna be very weird if you ask me. Because when you are having a business, just like trading, right? Whether you're a groceries, right? You buy apples and sell it to the consumer. Some apples are going to be rotten. When you do business, you're going to incur expenses like your lease, your electrical bills, etc. So when you're trading, you're also going to have losses incurred along the way. And there is no shame. There is nothing to be afraid of when you have losses. Just take it as it is. Because everything has been accounted for. Everything has been planned for. And the risk has been managed. So this was a trade I got stopped out of on the New Zealand dollar. So great, I got stopped out. So what next? So I asked myself this question. Okay, New Zealand dollar, I know the trend is still down. Because we saw the weekly chart earlier, the trend is still clearly towards the downside. So when you look at the 4-hour chart, what's interesting to me right now is that I see price coming into came into a resistance area. You can see that previously this was the support. Price broke below the support and retest. Previous support turn, resistance. So price retested as resistance, then it traded lower, and then it rallied all the way higher, trading back towards the resistance again. So what I want to highlight and share with you right now is the price action context over the last 5-6 candles over here. So let's analyze it bar by bar. So you can see the first bar over here. Price came into this resistance area, and then there was some selling over here, and price closed over here. So these two candles, then price consolidate just below the resistance. So that's telling you that there are buyers willing to bid at these levels, willing to buy just in front of resistance area, followed by a break and close higher above resistance. So at this point, I would say a lot of traders are looking to trade the breakout, because they say, oh, okay, resistance is broken, let's long the breakout. So they got long. And what happened next? Well, the next candle, price closed lower. Now, those who are long are clearly, they are trapped right now. And those who are looking to short, this was a possible bearish engulfing pattern that they took, and they are short. So you have traders who are long and traders who are short. Then the next candle over here, you have a higher close. So those who are long the breakout, they are seeing some hope. Is that okay, price is could potentially still trade higher. So those who are long are feeling better at this point in time, and those who are short are currently starting to feel the I would say the edginess on their seat. They're feeling a bit uncomfortable. Then what happened next? The next candle, price opened here and then tried to stage another rally higher. But then, it's not long before the bears came back and controlled it and pushed price down lower, closing over here. So at this point, the bulls are the one who's feeling uncomfortable, and the bears are feeling good because they are clearly now in control. And the most recent candle, what you got is again, price opened here. The bulls staged another rally all the way higher, couldn't close higher, and finally they just closed marginally higher over here. So at this point in time, again, you can see another rejection of higher prices. So the last two candles, you see rejection of higher prices twice. So clearly, the winner and loser is still undecided. There are those who are long, who long the breakout, and who are in losses right now. And there are those who short at resistance, and it's still unclear to see whether the shorts are going to win or the longs are going to win. So which side do you want to be on at this point in time? Which side do you think is the path of least resistance? Well, if you ask me, this is my opinion. You know, on the weekly chart, the trend is still towards the downside. So if you look at the forward chart, if you ask me which side should I be on, I would say I would prefer to be on the short side, because of the fact that I'm trading with the trend on the longer term. So this is just something for you to think about, the New Zealand dollar chart. So I think some of you are wondering, okay, Rainer, so okay, you're looking to short, so where will you short? Okay, so just to share with you that this is not a trading recommendation. I will not be responsible for your wins or your losses, alright? This is entirely up to you. So be responsible for your actions. So if you ask me where I'm looking to short, Monday come, what I'm going to do is that I'll be looking to short at the market and get my stops above this high over here. I'll look to take half my profit at this swing low and the remaining half at this swing low over here. So this is what I would do when the market opens on Monday. Okay, so that's my take on the New Zealand dollar. Let's have a look at the Euro dollar. So Euro dollar, okay, last week again, I've mentioned that Euro dollar, the forward chart price is respecting the 20 and 50 period moving average. So again, this week was an opportunity for you to go short at this area over here where price retested the 20-50 period moving average. So what's interesting about Euro dollar is this. You recall that on the weekly time frame in 2014, price has actually fallen 25%. And in 2015, the Euro dollar has just basically ranged for a good period of time in 2015. But let's take it one step higher. Let's look even one more time frame higher. Let's see what price is doing. So this is the monthly chart, and this is the monthly chart of Euro dollar. So you can see on the monthly chart, Euro dollar was actually ranging for a good period of time. This was the lows, the support area. This is the resistance. So it's recently that Euro dollar actually break and close below these multi-year lows. And if you ask me, from the looks of it, this consolidation over here that I'm seeing, chances are it's just a bear flag, if you ask me, a bear flag. And if these lows were to be taken out, I would say Euro dollar, I would anticipate lower prices retesting the lows over here. Again, this is just my so-called prediction. I could jolly well be wrong, and if I'm wrong, I'll take the loss and move out. But just looking at this big picture perspective, I would say Euro dollar seems to be forming a flag pattern, and we'll see whether these lows can get taken out and whether, you know, price can trade all the way lower, retesting back the lows over here. So these are lows in 2001. Could be a massive move if that happens, but still, let's keep a lookout on what could possibly happen on Euro dollar. So up next, let's look at another chart. I think is another Euro pair, Euro Aussie, is worth a look as well. This is the weekly chart of Euro Aussie, and you can see this is the support area. Man, my drawing is bad. Okay, support area. And this is the highs. So clearly price was in the range over here, and then it broke out of the range. Broke out over here. And what happened? Well, there wasn't any follow through. Sellers came in and pushed price down lower. So clearly, I mean, on the hindsight, this looks like a false breakout. So those who are long basically got trapped, and hopefully they cut their trade, because price right now, you know, seems to be trading back lower into the range. So on the weekly chart, you can see price, you know, back into the range, and if you ask me, there's a good chance of it retesting back this lows over here. So is there any trading opportunity for this? Well, there is. So look at the forward chart. You can see that the 20 and 50 period moving average, they are acting as dynamic resistance. So if price retraces back towards the 20 and 50, I would say there is a potential opportunity for you to get short the Euro Aussie dollar. Okay? And last but not least, just a additional bonus added tutorial. I just want to share with you, highlight to you something. So traders like to trade head and shoulders pattern, right? They say it's an uptrend, then you see a head and shoulders pattern. Oh, it's bearish. Look to sell because price is going to reverse all the way back down. Something like this, right? This is the left shoulder, the head, the right shoulder. You see one, you short, and price could just smash lower, and you can call the tops in the market. But let's think about this. Let's look what would happen if you were to trade this blindly. Well, look at the daily chart. Scroll back a little in time. You notice that, okay, I think this, where was it that I saw earlier? Okay, this was one. Left shoulder, head, right shoulder, neckline, pump, sell, bearish, sell, sell. Then what happened? what happened? Well, it did trade lower, consolidate, trade lower, and then it rallied all the way back up higher. So depending how you manage your trade, it could either be a win for you, a break-even trade, or even a loss if you were, too aggressive, in anticipating that price would smash lower. So another example I think I saw earlier, another one is this. Head and shoulders pattern. This is not very clear, but if you look at it, you can see. Another one here, neckline, price break below it, and then it rallies higher. Another one here, this is left shoulder, head, right shoulder, price break below it, trade below, and then rally higher. So you can see, head and shoulders is I would say, be careful when you're trading it. Because it doesn't mean that, price is going to reverse 180 degrees just because you spot one head and shoulders pattern. Always look at it in the context of the trend. What is price doing? So you can see right now, price is clearly forming another head and shoulders pattern. This is the neckline. So if you're going to go short, thinking price will go all the way back down lower, back to the multi-year lows, I'll say, think again, right? Think again. Why do I say that? Because if you look at the weekly chart, what is the weekly chart telling you? It's still in an uptrend, right? Price on the pound Aussie is still clearly in an uptrend. So the odds of it breaking this neckline and going all the way lower is, I would say, pretty slim if you ask me. I don't rule out the possibility of it because in trading you're dealing with probabilities, but the odds of it happening is slim. So when you're trading chart patterns, whether is it head and shoulders pattern, whether is it flag patterns, always take into account the context of the market. What is the higher time frame doing? So I think this is very important because often I see traders, they just see a pattern on the chart, they do, oh Raider, look at it, head and shoulders, oh short, price is going to collapse. And then it traded lower by a little bit and then it rallied higher. Because why? Because they clearly forget to look at the context of the market. Okay, so I hope this lesson is useful for you. And you got something out of this. So if you have enjoyed this week's market analysis, I will highly encourage you to actually hit the subscribe button below, the bottom right hand side. You can subscribe to it so you are always notified first whenever I publish a new video. So if you have any comments, any queries, feel free to let me know. With that, I wish you good luck and good trading. I'll talk to you soon.